Donald Trump expected to announce a trade deal with Britain today. Our guest says the impact of Trump's trade war is just beginning, and that tariffs are likely to lead to a meaningful rise in inflation and a sharp downturn in real GDP later this year. We're joined by Jay Bryson, chief economist, corporate and investment banking at Wells Fargo. Jay, it's great to see you. And of course, you and everybody else would point out that we just don't know what the tariffs are going to settle at, but you see a real risk to economic growth here.
Yeah, we do, Andrew. Right now, if you look where we are right now, the effective tariff rate in the United States is about 25%. That's roughly the highest it's been in more than a century or so. And when you put that through our models, what it shows is that the inflation rate here would go from something like 2.5% up to 5%, Whoa. And then GDP growth in the second half of the year would contract at roughly a 2% annualized rate. Now the question is, and I think you just pointed this out in your question, is that, are we going to be at a 25% tariff rate? And our guess is probably not. I think it's probably going to come down. There'll be some negotiations and everything. But still, in our forecast, we're assuming a 15% tariff rate. And again, nobody really knows here. That's kind of our assumption. But, so maybe you don't go up to 5% in terms of inflation. Maybe it's more like in the 3 range. And maybe you don't get the big downturn that I'm talking about, but you probably are going to get a downturn in GDP later this year.
An actual recession, I know that's a very difficult call.
Yeah, so that's a difficult call. And I guess if you would look at our official forecast, which we released today, it would not be what the National Bureau of Economic Research, which is the arbiter of recessions in this country, would deem one to be. I mean, we do have employment contracting modestly, but it doesn't last very, very long. And so I guess the way I would think about it is I think we're skating dangerously close to an actual recession later this year. If we're right and the effective tariff rate settles out around 15%, I think you're going to get a meaningful slowdown in the economy. And it really wouldn't take much of a shock on top of that then to topple you into recession. So, whether or not you actually have a recession here, I think still is an open call. I don't have a big conviction over that, but I think where my conviction lies more would be, I think you're going to see a sharp slowdown in growth in the United States later this year.
And you say there's going to be still some stomach-turning turbulence this year.
Yeah, and I think that's what we've seen so far this year in terms of everything that's going on. What's going to happen with tariffs here, I think remains to be seen. I think there'll probably be some good news as we go forward, like this announcement that's upcoming with the United Kingdom. But clearly, I think there'll be setbacks along the way as well, particularly with China. I think that those negotiations will be very, problematic's not the right word, but be contentious. We'll see what happens with our, the negotiations with Canada and Mexico, as well as with the European Union. And so, in some sense, the United Kingdom is kind of small potatoes as it relates to U.S. trade. The big ones are going to be Canada, Mexico, the European Union, and China. And I think those will be contentious at times.
Talk to us then, if you would, about interest rate policy. The Fed, you think, may just decide we'll just hold back here because there is a risk, of course, of inflation, but there's a risk of an economic downturn.
Yeah, and I think that was the message from the Fed meeting yesterday, and Jerome Powell's comments, afterwards. We think they're on hold probably until September, just trying to figure out which way the economy is going to break. We think the unemployment rate's going to come up. We think inflation will be coming up as well. That puts the Fed in a little bit of a box about what to do. And I think what they need to really figure out then is inflation going to be more lasting, or is it a one-off sort of effect? If it's only one-off, which we think it probably will be, then we see the Fed starting to cut rates starting in September. But I think they're sitting on their hands right now, just trying to figure out which way the economy is going to go.
Now, you start off by telling us that America has not had a tariff wall like this in a century.
Yeah, that's correct. I mean, if you go back, you look at the effective tariff rate back last year, and so the effective tariff rate is kind of the weighted average of all of our trading partners, all the goods we import. Last year was about 2%, and so you would so to get to 25 or even 15%, you would have to go back almost a century for those sorts of tariff rates. And so it's not unprecedented where we are, but it's unprecedented for anyone who is alive today.
It's interesting, yeah. I mean, President Trump carrying out a gigantic economic experiment here and trying to remake the economy very rapidly.
Yeah, and that's right, Andrew, and it is very, very rapid. And so if you look at that tariff rate, that has come down over decades. It's been very, very slow. And even if you think about like the globalization sort of era here in the United States, that was in process for 20, 30 some years. That was a very, very slow adjustment to that. The president is trying to remake things very, very quickly. And again, I don't think this 25% effective tariff rate is going to stick. I think part of this is a negotiating tactic, and as he gets some trade deals, we will see that effective tariff rate come down. But still going from a 2% to, let's call it a 15% in the course of a year, we just have never seen anything like that. I mean, I guess maybe if you go back to the early 1930s with the Smoot-Hawley tariff here, maybe it jumped by that much. I don't really know, but in recent memory, we just haven't seen anything like this at all.
Jay, thank you very much indeed.
Thank you very much.
Jay Bryson, Chief Economist, Corporate and Investing Banking at Wells Fargo.